Okay, as you can see today, we are starting chapter 8, and we are at the last part of what we're going to call the accounting cycle. So this is where we've been up to this point. Throughout the month, we record transactions after we have some sort of document evidence that the transaction actually took place. So really, parts 1, 2, and 3 of this cycle pretty much occur on a daily basis. This is pretty routine. We get a document that references a transaction, we break it up into debit and credit parts, and we record it in the journal. And then we'll do our posting to the ledger. And we just recently looked at the end of the month, here we are at the end of the month, we prepare that worksheet, and we've got a couple of accounts that need to be adjusted. And what are those accounts? What are those accounts that need adjusting at the end of the month? Yes? Okay, supplies is one account that needs to be adjusted, and prepaid insurance. We need to account for the fact that one of our months in our insurance premium has expired. And so after the adjustment is completed, then we use that worksheet, that final worksheet, to prepare our income statement and balance sheet. That's what our last test was about. And now here we are closing the month. Okay, so what today's lesson is going to be about is we're going to look at 4 journal entries that basically close out those temporary owner's equity accounts. Do you remember what those are? The temporary owner's equity accounts. Jake. Expenses. Withdrawals. Okay, revenue. Very good. Okay, those 3 types of accounts, we keep a balance of them throughout the month, but at the end of the month, we zero them out. Whatever's in them, we put into capital, and then the next month, we start all over again with those balances being zero for the temporary owner's equity accounts. The balance sheet accounts always have a balance. We don't zero them out. So let me walk you through the process, and we're going to use the work together problem in your textbook. That's page 222, and in your workbook, it starts on page 159. So unfortunately, and if you want to, I don't know if it would help you to tear this out, probably not, but the information that's given on that partial worksheet on page 159 is going to be needed for your journal entries on the other side of that page, 160. So unfortunately, you are going to have to flip back and forth between the two. So yeah, if it makes it easier to tear it out, then that's fine. Okay, so I'm going to walk you through, and this is always going to be true at the end of the month when we do closing entries. There's basically 4 closing entries that we're going to do. So the first thing I want to do is head up my section closing entries, much like we did a couple of chapters ago when we did adjusting entries. We're going to head up a little section of our journal called closing entries. And the instructions said to continue with page 8 of the journal, so I went ahead and put page 8 here so that when we post, we'll know what to put in the ledger. Okay, so remember, we're at the end of the month. And we're told in the problem that this is April. So the first of the closing entries we're going to have is to zero out the revenue account. And the revenue account that we have in this problem is sales. Now normally, what balance does the sales account have? Credit. Okay, sales, all revenue accounts have a credit balance. Well, if I want to zero it out, whatever the balance is, what will I have to do to the revenue account? I will need to debit it. So look on the worksheet and tell me in the income statement credit column, what is the sales balance? Anybody see that on the worksheet? 2,160. So we're going to debit sales for that amount. And now you've been seeing this account often as we work through these problems dealing with the worksheet, this account called income summary. And at this point, up to this point, we haven't used it. Well, for closing entries, we are going to use it. So we're going to debit sales to zero it out, and the credit side of this is going to go to that new account called income summary. Can you see the blue okay? Is that all right? Okay. Okay, so that's closing entry number 1, and it will always be closing entry number 1, zero out the revenue account. Okay, closing entry number 2 is going to be to zero out the expense accounts. Well, expenses have what kind of balance normally? Debit. So if we're going to zero them out or close them, we'll need to do what? Credit. Well, our debit on this entry is going to be to that account called income summary. And we're going to have several credits because we're going to do this in this one journal entry. We're going to zero out all of our expense accounts. So just look at your worksheet and just start making a list. So the first one I see is called advertising expense. And that balance is $460. And then we have cash short and over. And that's $6. Insurance expense is $125. Miscellaneous expense and that is $189. Supplies expense is $153. Utilities expense is $550. Okay, so that should make sure I caught them all. Is that all the expenses? Okay, I'll save you a little bit of time, but at this point you would need to get your calculator and you would need to add all of these up, and the sum of all of these credits will be our one debit to income summary. So that'll make this entry balance. And I'll just go ahead and tell you what that is to save a little bit of time. It should be 1,483. Okay, everybody good on closing entry number 2? Any questions? Okay, closing entry number 3 deals with our net income figure. What is net income on the worksheet? What is net income on the worksheet? What's the amount? 677. Well, up to this point, we've shown net income on the worksheet, but we haven't actually put it in the owner's capital account in the ledger. Okay, we know what it is, but we need an entry And then we need to post that entry so we can update the owner's capital account in the ledger. So here's the entry to record net income and put it in the owner's capital account. We're going to debit income summary, and then we're going to credit the capital account. In this case, it's Connor Whitney Capital. And that's for net income, which is $677. Okay, now I got a question for you. At this point, what is the balance of our new account that we've just been introduced to called income summary? What is the balance at this point? I know we haven't posted anything yet, but if we did, what would the balance of income summary be? We credited it $2160. We did two debits of $1483 and $677. Its balance is zero, okay? And we've just used income summary for its purpose. It's really just to allow us to transfer balances out, but now its balance is zero, and it will remain zero until we do this closing entry process again next month. And we'll just use it again as a temporary transfer account. Just allows us to dump the amounts out of revenues and expenses, basically, is what its purpose is. Okay, and we've got one more closing entry, and it involves the owner's drawing account. So with this one entry, I'm going to serve two purposes. I'm going to zero out drawing, and then I'm going to show the owner's capital account to reflect the drawing that was actually done. Okay, so what kind of balance does drawing have normally? Okay, if I want to zero it out, then I would do a credit. Okay, what kind of balance does capital have normally? And what effect does drawing have on capital? Does it increase it or decrease it? Okay, so how do I show a decrease in the owner's capital account? Okay, so with this one entry, I'm going to basically kill two birds with one stone. I'm going to reduce Connor Whitney Capital by the amount of his withdrawals. And how much was that? What's the drawing balance on the worksheet? $1,700. So the effect of this is to lower capital by the amount of his drawing. And now this entry is going to zero out drawing. And now you know the 4 closing entries that are performed at the end of every month. So now, remember, everything that is recorded in the journal has to be posted to the ledger. So I'm going to walk through, for someone in particular that will remain nameless, I'm going to walk through this this posting process, because someone in particular doesn't really like posting. And so I'm hoping that as we walk through this, it'll refresh your memory. If you already feel good about posting, you can work ahead of me. But I'm going to walk through the posting these 4 closing entries. Okay, so you have ledger pages there that follow your journal page. Okay, so I'm just going to go line by line, starting with sales. I'm going to debit the sales account for $2160. Okay, and let me find sales. Now, one thing that I would ask of you, and the book really doesn't do this, but I like it. Do you remember when we posted adjusting entries, we wrote adjusting here in the item column? Well, now I'm going to write closing. And do you remember what goes in the post reference column? The journal page, which in this case is 8. Help me out so I don't have to flip back and forth. What was that sales number again? 2160, and that was debited. And to show that this is now closed, we're just going to draw a line like this, showing that the sales balance now going into the next month is 0. Okay, so to complete the posting process, I take the account number for sales, and I come back to the post reference, and I put the account number for sales in the post reference column. And you don't have to worry about anything in the document number column for these closing entries. All right, so now let's do income summary. All right, this time we got to do the year and the month, day, closing, page 8, 2160, with making a balance of 2160. Okay, the income summary account number is 330, so I come back and I close the posting loop by putting 330 in the post reference. All right, and we'll just keep working through it. Debit income summary for 1483. And that difference should be, I believe it's 677, isn't it? Anybody do that already? Is that net income, 677? Okay. All right. Go back and close the loop. Oh, should be 330. Now let's do advertising expense as a credit of 460. And that zeroes out that account. Okay, what was account number? Advertising expense was 510. All right, so you get the idea. Credit cash shorter over. Zeroes out that account, and it's account number 520. Insurance expense for 125. $530 is the account number. Miscellaneous expense for 189. $540. Supplies expense for 153. $550. Utilities expense for $550. And account number 560. Okay, now income summary gets debited for 677. And this should affect effectively zero it out. It had a credit balance previously. We come in with the debit for the same amount, and it's 0. 330 is the account number. Okay, credit the capital account for 677. And if you add those together, that should be 8,120. 310 is the account number. Okay, once again, we're going to debit, this time we're going to debit capital for the drawing amount. And that was 1,700. So we had a balance of 8,120. Now we're going to subtract 1,700, and that should be 6,420. 310 again. All right, looks like we just got one more. Close the drawing account. And 320. So we have done everything that Section 8.1 asks us to do. We know the 4 closing entries, we know how to post them, and then in Section 8.2, which will be tomorrow, we'll talk about the post-closing trial balance. So hope that helps. Let me know if you have any questions.